Hi, this is Dan Collins, editor-in-chief of Modern Trader magazine, coming to you live from the floor of CME Group for Traders Exclusive. It's December 1st, and we have a rally in crude oil I want to talk a little bit about. It's just over 2 years. We had Thanksgiving last week. It's just over 2 years since the most impactful OPEC meeting of a decade, where a deal was not made, and Saudi Arabia, basically the de facto leader of OPEC, had basically decided to push on with production, with the idea that they're the low-cost producer in the world, and prices go down sharply, which they did. They were already moving down in 2014, that everyone else would have to blink before them. Whether that is true or not is debatable, but what it was clearly true, that it caused a lot more pain than they probably had anticipated. This past week, a deal has finally been done. Crude oil markets have been roiled for over a year with rumors that there was going to be a deal in OPEC to cut production. There wouldn't be. The clearest thing that we know is that OPEC just doesn't have the power that it did. There are too many other producers, the U.S. with fracking, Russia, Norway, and one thing was clear, that from the Saudi perspective, is no deal was going to be done unless they got some sort of agreements from outside of OPEC to cut production. Well, Russia stepped up. The first time they signed on to were part of a deal in 15 years, that they'd cut production. Real problematical, because the last time they were part of a deal, they didn't adhere to it. They kept on producing. The big battle was between Iran and Saudi Arabia. Iran obviously is building back up its production, and it doesn't want to cut. So that deal was done. Yesterday, crude oil rallied about 8%, about $4. It's up again today. The interesting thing, as we talked, if you've seen in Modern Trader, if you've seen in futuresmag.com, is that in January 2015, I believe, but going back to the sell-off starting in 2014, it breached a huge trend line that dates back to $10 oil in 1996. As it went down there, that trend line was serving as support. It was finally broken through. It popped back up for a couple of months. And the real interesting thing for all this fundamental talk is that trend line that's sitting right now at about $50.5, $51, has been a magnet, especially on month ends. So we had this huge rally yesterday. Crude oil, front month crude oil settled at 49.44, still below that. As crude continues to rally, it'll probably break through that trend line, maybe by a lot, maybe up to $53, $55. But by year end, there's going to be a battle, and it's going to be battle over that area at $51. So if crude oil is much higher, is above 55 coming the third, fourth week of December, that's a great opportunity for traders, because that trend line that ties from the 1996 low around $10.50 to the 2001, and to the low in 2008, late 2008, 2009, that after the spike to 147, that bottom, you can just draw that line, and come month end, they're going to be battling over that line, which is a really, really good thing to know for traders. A lot of strategies, option strategies to employ. Really good opportunity, especially if crude rallies well above that. Look for it to test that line again at the end of the month. This has been Dan Collins for Traders Exclusive. See you next time.